Jeff, the movement, the action today is all about whether they go ahead with a cut like this. I think WTI is up by over 4.5%. Brent's up by about 4.3% on this news. Do you think OPEC actually goes ahead with a cut like this?
Well, they're incentivized to do it right now. They're the only producer in the world with spare capacity. I like to argue that, the old oil order is back. OPEC is probably more powerful than it's ever been in its 60-year history since its inception. And one of the key reasons really is the fact that we have not been investing in alternative energy sources. So they're really the only game in town. Now, why would they want to do that in the context of really low inventories and a record tight market is that the prices are down upwards of 40% because investors are fleeing this market. And one way to attract capital back into this sector is kick up the backwardation. It's the roll yield on the front end of that curve. And right now you have cash paying 5% 12-month LIBOR. And the question is, what can they get oil to pay on that roll yield? And if they risk adjust it and get it high enough, you're going to attract capital back. And one last point I want to make on that is that you can think about the financial story and the fundamental story for oil being two different stories. The financial story is controlled by the Fed. They're reducing liquidity, but the fundamental story is being driven by OPEC, and they're potentially taking oil supply out of the market. So it's OPEC versus the Fed at this point right now.
The one thing is they could be pushing at the wrong time. I mean, it's smart if you're playing checkers, not if you're playing chess, if you think through. By trying to take advantage of all of these developed nations that have relied on them for so long at a time when Russia is pulling the strings and benefiting from this Ukrainian war that they've set off. If OPEC looks like it is in league with Russia, that it is going to be tone deaf to any needs of its customers, then you really just push all of these other places to start producing more oil and become more independent from them.
But that's the whole point. There's nobody else out there that can produce that oil. So they're in a very unique position. That's my point, saying the old oil order is back. Core OPEC is stronger than it's probably ever been because there's been no other investment elsewhere in the world. And also that point,
if they continue to turn the screws at such a time like this, doesn't it only strengthen our resolve to get away from them and get back to where we were producing our own fossil fuels? Like, forget it.
Yeah, but you got to get to that point. That's going to take a lot of, and you're already at price levels that should be doing that. The returns are phenomenal. Exxon had the same free cash flow as Microsoft did last quarter. Nobody wants that share price anymore. So I think, the key point is, you got to, what are we going to incentivize to get the production to occur in the developed markets? But you made the point that, the emerging markets are the ones that's suffering here. It's the developed markets like Europe and Japan that are likely to suffer. Look at the commodity price increase in Brazilian real. It's 10% versus Japanese yen at 51.